Batman, Wonder Woman, and Superman walk into a bar. You heard this one? This is my favorite insurance joke. It's also the only one I know. So Batman, Wonder Woman, and Superman walk into a bar. And right away, they bump into this drunken, scary monster. And the monster goes up to Batman and says, hey, do you want to fight? And Batman says, no, not looking for any trouble. Monster snorts, goes over to Wonder Woman and says, hey, do you want to fight? Wonder Woman says, no, and you know what? This isn't the time or the place. Goes over to Superman. What do you think? Superman says, yeah, come on. Boom. Monster knocks Superman out cold, snorts, wanders off. Finally, Batman and Wonder Woman go over to Superman, look down and say, damn it, Steve, you pull this crap every Halloween. So the idea is we like to think we're invincible, but we're not. And that's why insurance exists. And in particular, why disability insurance exists. It's often something that goes overlooked. It's often something for which we don't have enough of for an event that, as we'll see here, is something that might occur a little more frequently than we think about. So we're going to talk specifically about physician disability insurance, but not only the impact on physicians, but on the practice in general by having enough of that coverage in place. So first, there are two things insurance guys like me love. Number one, corny jokes. Number two, scary statistics. So we are one down, one to go. And I know we've got fact checkers out there on the stats from earlier's presentation. So you can always, they're footnoted at the bottom there. So just a couple of things to think about to set the table. So good news, or something that is generally good news. Life expectancy has increased dramatically over the last 100 years or so. Our advances in modern medicine, things that used to cause premature death, don't do so as much. The flip side of that coin is they may lead to long-term disabilities. So what we're looking at here are the causes of new long-term disability claims that we see. And when you look at it, you see only about 10% are injuries and accidents. I think this is something that that Evan talked about earlier. A lot of these things, cancer, stroke, heart attack, we see that big circle in the middle there, muscle, back, and joint disorders. So this isn't necessarily just the car accident, or you always see like the ski accident, something like that. These are things that, over the course of a working career, we're going to come in contact with in one way or another. This is just a little food for thought on the likelihood of disability versus other things we insure against. So we see, what are the odds of something in an average year? 1 in 96 housing units catch fire. We have homeowners or renters insurance. 1 in 100 people injured in a motor vehicle accident. We have car insurance. In a given year, 1 in 114 people die. We have life insurance. 1 in 9 people, 25 to 64, suffer from a disability. So something that may be a little more frequent, not something that we think about. And just another couple here. So 25%, the odds of a worker entering the workforce today being disabled for 3 months or more before retirement. That trend continues, throughout our working years. So just to look at the bar in the middle there, a 40-year-old is 2 times more likely to become disabled versus dying. And the average duration of these claims is 30 months. When we talk about long-term disabilities, something that's lasting longer than 90 days, and the average of them about 2.5 years, a significant amount of time to be out of work to not bringing in income. So now let's look at a sample physician earning $300,000, and let's assume a tax rate of 40%. And so we get a nice round number of monthly income after tax of $15,000. Let's look at a 5-year period and assume that same physician suffered one of those average length long-term disabilities. So now over that period, instead of $900,000 total after-tax income over that 5 years, it's half of that. I know it's pick nice round numbers for some easy math on a Friday afternoon. So obviously that's a big deal. But what about the practice itself? So now let's look at a practice. Let's assume 4 physicians, total annual revenue of $3 million. Overhead expense, assuming 60%, you see 1.8 million, so the net distribution of 1.2 million. Now let's say one of those 4 physicians becomes disabled and is no longer to practice to bring in revenue. So the revenue is going to go down. Again, I'm just assuming for sake of argument here, it's equally distributed. that overhead expense is still there. There's still, rent to pay. There's still equipment there. There's still staff, et cetera. So now this firm has to make some hard decisions and really think about how they're going to move forward, how they're going to have to adjust things, how they're going to have to move things around. So something that, again, may happen a little more than we think about. Oftentimes, we're vulnerable to a situation like this. So now we'll look at some of the ways this can be solved with disability insurance. And we're going to look at, there's kind of, not all created equal, so to speak. So 3 things to always look out for: pricing, underwriting, and portability. Pricing, how much does it cost? We're going to talk about discounts. Underwriting, how are you actually going to get this coverage? And portability, can you take it with you? So pricing, in the individual disability insurance market, in the retail market, this stuff is not the least expensive thing out there. If you've ever gotten it yourself or applied for it, you'll see when you really break down the cost, you think, oh, wow, that costs more than I might have thought. And the reason is because it's going to cover all this period of time that you wouldn't be able to work. So the key is being able to find opportunities to get discounts, what are called multi-life discounts. So just in this example here, let's say you're paying a retail rate of $5,000 in annualized premium, represented by the red. Each layer we're kind of lopping off there is based on different discount tiers that we could get to. And then this is a big one, the underwriting. So, and that all that mess of questions there, those are actual questions taken from fully underwritten individual disability insurance application. So you can see some of them that are a little bolder. They seem pretty benign, stuff that we're all walking around with, sciatica, allergies, taking certain medications, anything that could cause someone conceivably to not be able to do their jobs. And physicians in particular have a lot more dynamic to their jobs than people like me who kind of sit at a computer all day. So the key is, can you get coverage if you still have to answer yes to some of these questions? And then portability. Sometimes a group long-term disability plan could be in place. You may have one at your practice, and that's a good layer of coverage. One of the key characteristics of that, however, is no portability, along with some others we'll talk about, no fixed terms, et cetera. Individual disability insurance is an individual contract that would be owned by the person and the insurance carrier, so it would have full portability. And so now we're going to look at, based on those factors, what we've been able to put together for PSMA member physicians. And here is that in a nutshell. So starting with just 3 physicians, if you have 3 physicians in your practice, you're able to get all of this coverage through what's called guaranteed standard issue underwriting. So what that means is, instead of answering that big mess of questions that we just looked at, you're just going to need to be able to say you're actively at work. So it's not going to ask a lot of detailed health history, get into what medications you're taking, et cetera. If you've been declined for coverage in the past, you'd still be able to get it. So these are based on the size of the practice, the maximum monthly benefit that you'd be able to get, along with that premium discount we talked about. You'll notice that if it's a mandatory plan, meaning every physician in the practice participates in it, there's a certain level of standards. And then you can still, once you get into 10 lives or more, do that on a voluntary basis and get up to this, up to the point where, so when I look at that 250,000, what that means is 250,000 times 12 months divided by 60%, which is sort of the magic number in disability insurance. That's what underwriters are happy with you getting to. Essentially, you're able to cover up to $5 million in compensation through a program like this. If you're outside of those parameters, if you have 1 or 2 physicians I'll talk about, you can still reach out to us and we'll find other solutions for you. But right now, this is what we've got in place, rolled out right now and active for PSMA member physicians in their firm. And this applies to not only the disability insurance, but as we're going to see in a few slides, covering that overhead expense for the firm. So if that revenue is lost, not just making the physician whole, but the firm as well. And I'll just also mention, if there is any other existing coverage, whether it be group LTD or physicians have acquired their own policies over the years, that's something we'll work with you to see how that can all fit together. Because with disability insurance, you can layer it and stack. So as I mentioned, these are the only questions that are going to need to be answered. Being an active PSMA member and actively working without getting into all the other health history stuff. If we revisit our sample physician, now the rates vary based on your age and the state in which you reside. So we're just looking at a sample here, and we'll get into at the end how we would look at your specific particulars. But we see, again, we were looking at a 5-year period for someone earning $300,000 annually, assuming that 40% tax rate. So we see physician 1, lucky her, she did not become disabled over this period. She's got the $900,000. Physician 2, unfortunately, had that average long-term disability of 2.5 years and cut in half. Now, physicians 3 and 4 both had disability insurance. And again, it's in this example, it comes to $400 a month for $15,000 of monthly benefit. That's usually a pretty fair estimate. Again, it'll vary by age and such. But it's usually going to come out to, for your physicians, about between 1% and 2% of compensation to ensure that 60% amount. So you see that outcome where the physician had the disability insurance, didn't get disabled, because often people will say, well, wait a minute, what if I buy this and I don't get disabled? To which I say, good for you, you didn't get disabled. That's unfortunately with insurance, you don't ever want to use it, but it's there because that number 2 outcome is so extreme of the 4, that's really the outlier. That's what you're trying to avoid. So by getting the DI benefit payout to replace that, you're able to really make yourself whole. And the same concept on the physician practice side. So now we see the same thing. In the first scenario, there's no disability. In the second one, one of the 4 was disabled, and we've severely cut into what is available to the firm. Third and fourth, they have business overhead disability insurance. And so you see we're able to come up with the, again, this is just assuming that among each physician, they allocate the overhead equally. We would be able to work with the specific amounts. But long story short, 3 out of these 4 outcomes are very similar and in a place where nothing catastrophic could likely happen financially to the firm. And then I know Jim mentioned a little bit about us. So we put this offer together through Peterson International Underwriters. They're a Lloyd's of London syndicate. We work with insurance carriers all over domestically and internationally. As part of what we would do on a firm-by-firm basis, we'll just help you see, hey, here's what you have today. Here's how this stuff integrates together. Maybe there's a need to fill in some gaps first on the domestic side, and then we layer this program on top. Everything that we do is consultative. We don't charge any fees or anything like that. We're a specialty shop. All we do is provide disability insurance solutions to large groups. And this is our information. If you go to that website, psmadi.com, you'll see the same information you saw here. In fact, a recorded version of this presentation and anything else that you'd want to get into.
Perfect, Pat. Thank you. Let's give a round of applause for this information. Disability, and I've not been on the benefit side of the house. I've been mostly property and casualty and healthcare risk management, but it's amazing to me, and I appreciate you bringing the stats and bringing that to life, so to speak, because you're more likely to be disabled over your career than all of these other things that we ordinarily insure from. And as Pat mentioned towards the end, they're relative to Covala group, and again, this is one of the things that I'm trying to bring to the party for members. They look at groups of 1,000 lives, 5,000 lives, basically. So they want large employers typically to offer these kind of discounts. But again, through the power of PSMA Connect and what this organization is trying to do to leverage all the membership, right, cooperatively buying, Pat and Peterson Group have agreed to do this. So it's really exceptional offer because it's a great product. And you saw the underwriting is pretty exhaustive, right? Are you a member? Are you working? That's it. That's it. None of these other questions, which I think I can answer yes to most of those you had up there earlier. So 2 things. I mean, for me, again, more likely to get disabled than all of these other things happening to you. But would you talk for a minute? I'll just open it up while other people get their questions ready. Would you find that physicians in particular, they probably come out of school, they get into practice, they buy some level of disability maybe, and then they don't look at it again for 10 years? I mean, would you speak to maybe the gap that might be there?
Yeah. And the first part of it is first, people are approaching physicians about disability insurance as even before residency, while they're in medical school. We're one of those groups who does that. So one of the reasons is physicians, more than almost any other group, understand the human condition and understand that these things can happen, and so they can see beyond see what those statistics mean and want to get this stuff. So oftentimes people will acquire something in residency. It's not usually top of mind. And then what happens over time, so the whole point of disability insurance is income replacement. So when you acquire a certain amount, it's usually based on that magical 60% number. So let's say you were earning 200,000 right out of the gate. So you would want 10,000 of coverage, 10,000 of monthly benefit to get to that 60%. And then, 10 years down the road, you're at 300,000. You haven't updated the coverage. All of a sudden, if you become disabled, you're not getting 60%. You're going to get that lesser amount. Instead of the 15,000 you'd require to get there, you're going to get 10,000. So it's a good conversation to have in general, just to sort of say, hey, what kind of coverage does everyone have in place here? Maybe maybe you need more. Maybe it's someone who just was not able to pass that underwriting process in the past, and because of that, sort of said, oh, well, those are the breaks, and unfortunately, I'm uninsurable to get this sort of thing. Through this program, this type of program, those are the folks who can get coverage.
So questions for Pat, any of the physicians in the room here that, what are you doing now? What were you looking for? And in practice administrators as well, because you wear so many hats, how often does a physician bring up disability, or if at all, and is this something of interest to talk to them? So who wants to go before I pick somebody? And I will. Okay, here I go. It's potluck now. I'm walking around. Somebody's on their phone. That could be almost anybody, right?
Don't make me tell another joke. You don't want that. You don't.
In my office, I don't really hear the question about the disability often, and I haven't seen any of our physicians out for any disability reasons so far. So I think this is a good conversation to have, though. I don't disagree at all.
That's great. I appreciate that.
And that's the point. I think sometimes when people, until it's sort of, one of those typical, until it happens to you or it happens to, people you're directly connected with, you might not realize, oh yeah, this is something that is happening, next door, down the street, or around the corner. So that's why some of the challenge is starting the conversation. And a lot of times when we are in a group and we're doing an enrollment, let's say it's at a larger group that already has an underlying group plan or some other coverage they've had in the past, when we go in to talk to them about additional coverage, most of the value is even for the people, who don't end up getting more, to understand what they have, how that works, what the real situation would be if something were to happen and they would need it.
Excellent. Questions? Thought? Anybody? May I ask one of our physicians over here? Pediatric physician. Could you share, just not details, but
this disability insurance, do you have for less than 3 physicians, like you said, 0 to 1, 3 to 5, or if I'm the only pediatrician in my practice, so.
Right. So currently for the guaranteed standard issue coverage, meaning to be able to bypass the underwriting, there's a minimum of 3 physicians there. We're always going to continue to work with PSMA Connect to evolve this offer and find ways to, once we show, the underwriters the interest in this, and continue to build it. So it is something right now, if you reach out to us, we'll work with you to find other solutions, but it would be through, there would be underwriting involved.
Sandy, hang on.
If you're buying disability, you want to pay the premiums yourself. You don't want your corporation paying them because of the tax differential.
Correct.
If you accept the disability. So you might want to touch on, I don't know what the last year's tax act change any of that, the taxability on disability income.
Yeah, no, none of that has changed. So with disability insurance in general, if you pay the premium with after-tax dollars, all those benefits when received, and that's how we saw them illustrated there, are tax-free. If your employer pays for it, then they would be taxable. And that would also apply to that short-term disability product that Evan talked about earlier. It's the same sort of concept. So if it is, with physicians, if they are a business owner, that'd still be considered that they're paying for it, so they would get tax-free. But if it's an employed physician, you'd want to make sure that he's paying with after-tax
Right.
dollars.
I was such a big believer in disability that I would bonus whatever the monthly or yearly premium was so that people could pay for it themselves and achieve the full tax-free benefits, because otherwise you don't end up with 65%. And 65% tax-free is obviously close to 100% if you were taxing them on taxable dollars. So that's why that works. But it doesn't work if you're not paying that premium and your employer is. So if you have an employer and have the employer just bonus the money on the cost of the premiums every year to the people so they can pay it direct. And that's a real benefit.
No, that's a great point, and that is the ideal way to do it, to get tax-free money. And another way, just to, I know we've got the next person, but let's say you do have something that's employer paid at that 60% mark. Then when you go in the voluntary on top, which would be tax-free, you could go as high as 75 or 80% to still offset to get you to that net 60%. So yeah, great question. Thank you. It's a lot to, consider, to not only, hey, what's this gross benefit amount, but what are the tax ramifications. So again, if you have any questions on any of that stuff, want to check it out more, see what the options are, give us a call. We're here to help. Thank you.
Awesome, Pat. Thank you.
Thanks.
Really appreciate you making a trip.
Yep, of course.